What's up, everybody? Good morning. Good morning. Let's go. Wake up, everybody. It's trading time. Oh, hello. Abrupt little switch there. Still working on building the new stream out. I know I was gonna have that finished by this week, but looking more like it's gonna be finished or finished by Monday. It looks like it's gonna be this week instead. New stream, new look, new feel, new everything. Camera back on. I got my camera fixed. The camera's acting weird for a little bit. Windows and its forced updates. How Windows can be. Marketplace looking clean and sexy. I love it. What's up? What's up? Good morning from GM from the 713. Let's go. 713 H-Town. Let's go. I didn't know you were from Houston, market trader. Come on over. Just come out sometime. Me, you, Ben's from Houston. There's a lot of people here in the stream in the morning from Houston. We should all have a powwow. You guys like crawfish, like a weekly thing over here. Howard household. I get crawfish all the time. Except for this year's like the worst crawfish season I've ever experienced in my life. Expensive, they're small, inflation. Crawfish are experiencing shrinkflation right now. Even mud bugs can't escape. In fact, they're getting smaller for the same price. How dare they? Let's get ready to roll. Houston was the OG Houston 713. But we got a bunch of area codes, so that was like the main one for Houston. Come on, let's go. Resilience is negative on Nasdaq, positive on the S&P. Let's kind of see what we're. On here. Oh, dang. Oh, I'm a daily mode. I was like, candles. Okay, there you go. Come on, baby. Read. What do we have? We're opening below hedge fisher. Okay. All right. So this is a little difficult one because I want to wait for hedge fisher break to actually take something to long it. Let's take a look at Q's today. Q's opening above the zone right here. So I will actually long on a hedge break with velocity if things look good. Both resiliences, S&P's negative. Nasdaq is kind of like right on the edge. So unfortunately, there's no move yet. So let me open my pencil here. Good morning, everybody. Smash the like button. Let's get ready to go. We're gonna roll this. Epic pen. All the time it tells me to start the trial. I paid for it. Bought the lifetime subscription of that. Come on. All right, so here, this is the easiest trade that there is. This is the easiest trade in the world. That one I just drew right there. That's the one. That's my little darling favorite. That's the one. Okay, let's see if I can get it today. All right, from here, so the setups are basically like, there is no red in here. There is no red in here when I don't ever take it. So resilience can apply hedge pressure break. So if res is really strong, it can break if res is greater than 0. So whenever you have blue inside the box, resilience greater than 0, it can break through hedge pressure. This goes to DD bands if it does break. The best trait inside of here, there is no short setup that I look for because there's no red there, no red arrows. But inside of here, I always, this is my favorite scalp. And that's DD greater than half. Bulls on bottom tap on a BSU is the strongest bulls on bottom tap of all of them. This would be the strongest play. So I can get it and be good. UQQ, kind of a similar boat. It's bull long up with kind of nothing to go for. Resilience is positive. So similar boats, they could likely move at the same spot. So that's all I've got for today. Pretty simple setups. Let's look at VIX. So inside of here, it's like, if I wanted to take a long here, I could possibly sustain about 10 points of drawdown. Not that big of a deal, but this is such a strong bounce. I'd love to take it. With Nasdaq being minus 18 and S&P being minus 12, we know how that goes. Let it do its thing. Let's look at UVXY today. Good morning, everybody. Don't forget to smash that like button. Let's go. Hit it. VIX is in a nice decay pattern. Bear short up in general is bearish. The decay pattern is very nice. So we want to see that for the continual bull market. This would be a lucky day if this comes out and hits bull zone. A super lucky day. I would love that. But the market is fighting to stay alive, so I don't know if we're gonna get. It's no short setups today for me. I like what I see. Nvidia earnings. Let's kind of see where we're playing here on Nvidia. It's gonna be kind of the big. The market close today of Nvidia, so you know. Let's go ahead and do our thing that we do. Nvidia earnings. Do we think Nvidia earnings is going to be up or down? Monthly maps have been very good at forecasting what earnings are going to be. This is some new things that our members have been coming up with. Observations of how the monthly maps positioning into earnings are showing a lot. Now, Nvidia, unfortunately, no help, right? This is both sides are flaring out, which is showing volatility, ambiguity. It is one of the first few times you've seen major earnings enter toss-up territory. Major toss-up with volatility going up. Let's see. Okay. All right. Does y'all see this? So how is Nvidia going to pan out? It's anybody's game. So Nvidia is not giving us a clear read. Like we could usually take a stab at guessing, right? The monthly map is showing ambiguity. It's gonna be a wide day, so it can break expected ranges. So then when you look at moves like that, wait a minute. When you look at moves like that, these are times when, you know how a lot of times the expected move, if you don't break the expected move, IB completely crushes and the value just drops, right? So when you get these volatile days with a lot of ambiguity like that, these are days that Nvidia can beat expectations or move. There's a lot of people betting two totally different directions, right? It's not even close. Yeah, like Nvidia is gonna move. So the good thing to notice is that Wall Street's betting both directions, getting out of the way. Wall Street is completely volatility expected to rise. So interesting to see that volatility is expected to go up. So normally you'll have a little bit of you know, the monthly maps will kind of give you some sign or signal. That there's a direction that wants to happen, and that people are betting in a certain direction. And that particular morning, you know, read on those monthly maps isn't really showing that. Okay, let's go ahead and expand S&P and look at monthly maps on the overall market. Let's check this out and see what we got. Bulls, bull. All right, bull, bull across the board. Bull side slipping down. Bulls are longing more. Bear side slipping down. Shorts are covering. No volatility. Volatility is still contained and crashed. So it could be that Nvidia is the blast up. We want that. At least the stock market's not expecting to sell off. Good to see that. Nasdaq trying to move its way lower. Even though resiliences are positive, Nasdaq at the lower end of the box might have a little bit of a bounce here. So yeah, okay. So my targets are written on the page here. You know, I only trade when I have something I really like. In this account, the contest account. Let's let it do its thing. Let's get back to doing some. While it's falling, let's go ahead and do some calcs really quick. We need to catch up with our old buddy yellow lines, red lines. Okay, let's do that. I'm gonna fall to my spot to take a long from, so in the meantime, we're gonna go ahead and do some calcs, right? And let's delete all the things that don't apply. All right, let's just double check we have everything here. Have we crushed any of these yet? Oh, we have. We've beaten this one. Oh yeah, it's been a while since I've drawn these. Okay. So the market is it's still very bullish. It still looks really good. Overall, the general market, the bigger market looks good. All the signs are still great for the greater bull markets too. A lot of the bears out there that are like, I'm ready to short this. I'm ready to, this thing's gonna die. I'm ready to, you know, I usually, I've learned in my years of trading that the one thing you don't do is fight the sentiment and try to guess that Wall Street's wrong. Which is what typically that is. Oh, I'm not gonna get a chance to do a red line on that one. Maybe we'll get lucky. It's one thing if you. No, I'll tell you something. I do this video called like I never short a bull market. And let me tell you, you can short if you want. It's not stock advice, trading advice from some rando on the internet. Let me tell you what this is. This is just my history of doing this. I know that Wall Street is very rarely wrong. And when they're wrong big. When they're wrong, markets crash. And markets crashing being like stock market crash, the housing market. And you typically Wall Street, when they're wrong, are wrong for a very long period of time, while the market still goes in the wrong direction. That somebody sees like the market needs to crash. This is ridiculous. These numbers are dumb. How is it still going? And then it tends to still go for years at times and still feel dumb. And then you can still see that everyone's wrong. And then the next phase is everyone can see that everyone's wrong. And the market still goes up or in the wrong direction. And then it comes down. Once a lot of the people who were seeing that was wrong took the bet, can no longer sustain the bet and have to get out, whether they're squeezed or it's too expensive to short. And then it finally falls once everybody was, it's kind of like a little crescendo here. It's like once you see somebody's wrong and you make the bet, then other people see that everyone's wrong, and other people see everyone's wrong, then everyone sees everyone's wrong. And then all of a sudden people no longer bet against it, no longer bet against it, no longer bet against it. And then right about here is when the market crashes. Most of the people who are betting against, these are all the people that are, amount of people that are shorting a market that's bullish. Very few people actually get that bet right. You have to pick it, you have to survive all the stupidity for years, and also be able to afford to hold your bet if you're hedging it, for instance, by buying calls or something. So very few people ever like market needs to crash, all the data looks like it, and then you pick your short, and then in a couple days it just completely collapses. Typically, Wall Street punishes anyone for betting against the market. It's just never advantageous to do so. So I only short markets when all three sides, like short in general. If I get a short setup occasionally, I might take a short scalp. But in general, when the three things that we look at, monthly maps are bullish, DD ratio is bullish, greater than monthly hedge pressure on the S&P. When those three things are there, I'm not looking for short setups. Even though there's short setups throughout the day, I'm always leaning towards the side of the market. Wall Street is bullish, then I'm looking for bull setups. That's it. So while there are short scalp opportunities, it's not terrible to do so. I don't do so because I'm a person who likes to stack my odds. If there's just a slight, if it's 51%, 49% chance, then I'm taking the 51% chance, even if that 49 looks juicy. Does that make sense? Because I know that Wall Street, for you to be right betting against Wall Street, then everybody has to start liquidating their position for it to reverse. And you have to be the lucky recipient of the timing of that. And timing that is completely impossible. So what I don't do is try to take shorts inside of a bull market unless it is a scalp. Like I will get in and get out in maybe 5 minutes or 20 minutes, I'm out. So if I find like scalps and resilience or something, yes, worth taking. But it's not like I'm going to take a short and then let it fall and let the market collapse. Same thing in a bear market. In a bear market, when volatility is high and markets are collapsing and all the indicators are pointing south, I don't go in there and try to long betting that every dip's going to get bought up. I have to make sure I find something too long off of that's a solid pivot and go. Just like on shorting, I need to short something that's a solid pivot and then go. So Chase, I used to make long and short plays with rocks, pretty much only looking for longs that's below MHP and DD ratio is low. I'd rather miss a move. And I think Chase is learning something that I've learned over the years is valuable. You don't need, there's people who you may watch trade who trade a lot, who are always in a trade. They're betting long, they're betting short. And I'm going to tell you what I know. A lot of these people don't make any money. And I know that for a fact. And so a lot of times, if you just keep trying to trade a lot because you're a gambler with a gambling addict, you're going to really do bad. If you're learning like what Chase is learning, is that if you find what you like, and if you don't see it, you sit out and you're okay missing a move, you're actually you're taking a step in the right direction of actually being a good trader. Only trading a hand that looks good. Poker players don't play every hand. Poker is the same exact thing. You don't play every hand. Right? You get dealt a hand, you're like, nope, this doesn't look good. Counted the odds. The data suggests that, I've counted the cards that have, Vegas can't do this, but like in, home poker, you got a deck, and then I've counted all the cards that have been played. I know for a fact it's a high probability that I'm not going to get the jack that I need. Okay, let me fold. Okay, right? You just see the odds against you, although it may be 60-40. You may not like that your chance is 40, you just fold. And if you're not doing that while playing the random side of the stock market as well, then you're really just out there gambling. And there are a lot of gambling addicts out there pretending to be millionaires and traders that are awesome, and they're actually, hemorrhaging millions of dollars. So, careful learning from people who do not do this well. And I always tell people, people are like, are you a good trader? I'm like, I'm remarkably average. And I'm the one trader that doesn't make claims. I just say, come watch me. If you like what I do, then watch me. If you don't, then don't. I'm the last person to go out there and I say I probably have the best risk management on the planet though. I avoid the market because I don't need to make money. I don't need to make a trade. I don't need to do anything. I avoid the market if I don't like what I see. I take the market if I love what I see. I don't like to flirt with the market if I just like it. I'm not a tender slut where I go on a date with anything that moves. Okay, I'm very picky. I'm more like a eHarmony kind of person. I'm looking for a relationship right now. Market. I like to marry it and maybe not date it. I'm going for the win. Not the good time. Not the good night. Not the good Friday night. eHarmony with their algorithm. Remember that? Those old commercials. All right, let's do our red lines. All right, what I'm doing a technique right now is illiquidity pivots for those of you that are new, and I'm just entertaining you while I do it. Now again, these are going to be slightly off because I didn't do them when I should have been doing them. Yeah, marketplace took all my time here. But that is actually where the impact is as well. And the run length. Okay, cool. So just be oops. Chase is doing the right thing. He knows what he likes, takes what he likes, doesn't risk what he doesn't like, and there's nothing wrong with trading that way. Because honestly, if you know what you like and you know what your odds are in your control, you can make a living doing one type of trade once a week. You don't have to go out there and try to scalp and player remove the EC. Okay. Alright, let's do some yellow lines. Really quick, let's grab the box. That one is here. Okay. Spy hedge pusher break. Downside or upside? To the upside? Oh, nice. I think we opened below it, right? Yep. It's BSU. Okay, these are our breakout targets. If you learn this trick from me, use it. Study this one from the from this video. This is a freebie. It's going to be your upside breakout targets. It's very good at doing this. You know, there's a lot. I keep a history of them on this chart. This is not my active trading chart with these bazillions of lines. This is just like my active history of my drawings. So I keep all the drawings here. I keep all of them since COVID, since wherever. I have an active history of these things. I want to make sure I keep them known. These are all pivot points, and they will always be pivot points. And this is one of the best techniques to learn. All it requires is you to draw on your chart. You can use your Fibonacci tool. That's what we use, and we gut out all the useless Fibonacci numbers, which is a very useless thing. You fib traders out there, Fibonacci numbers, there's no magic to them. They're just a little bit of a stretch. But the 50% between two lines, the middle of a range, is always a decent thing to look at. So we take the tool and we turn it into a ruler with a midpoint, and that's why my fib tool looks like this. I gutted it. It means I got all the unimportant things. Why is that floating off of the wrong spot? Okay. How did that happen? These are going to be my return pivots and dips to buy days and weeks down the road. So I'm getting ahead of my trading like by weeks at this point. This is going to predict high targets. This is going to predict low targets on breakouts, everything. Okay. We have some yellows from yesterday. Okay, perfect. Watch. And then the culmination of all this work I'm doing. Like, why are you doing this, Mr. Guy? Well, I'll tell you. Okay, ready? Ready for the fun? Here it is. All of our homework. We did it. Proud of you guys. We did it. Let's pull this thing over. What this does is exploiting a very cool process. Goes on the market. I'll show you how cool they are. So I didn't look at any of the price, so I'm just drawing off of seeing, I mean, any of the current price. I'm looking at the past price here. I'm just gonna estimate these. I'm gonna go in and tweak it, clean it up a little bit. Home sales in 7 minutes. Yeah, let's get that catalyst we want. That'd be great. Okay, let me zoom in one more time. At the tops of these boxes, and then I'll show you what they do. Round to the nearest whole tick. Conservative round down to the nearest tick. The conservative answer. Quarter of a point on the S&P. I didn't draw that on there accidentally. Yeah. All right, one more. All right, these are my targets. These are my upside targets. These yellow ones right here. So what the red ones are downside targets on pullbacks. So whenever you're breaking out to new ranges, new highs and new lows, which we are pushing to, you know, new highs, all-time highs in this range, this is the technique that you do to find your targets on the upside on your long trades and your pullbacks on those sell-off days. That's all this is. This entire thing that you just watched, it's exactly what that's doing. Okay. Did I skip one? I did skip one. Here, last one. About NASDAQ, I'll do NASDAQ as well. I just want to do it here on the stream because this is a you know 15-20 minutes. Y'all don't want to watch me do this again, but we'll do the NASDAQ. You do it in the same fashion. I'm just gonna do the S&P because the S&P is the most important one to do. But yeah, you do the NASDAQ. You need to do NASDAQ as well if you do pay attention to the NASDAQ. All right, let's go observe the fruits of our labor. Okay, I leave the boxes on here just for history of where they originated. They're no longer important to you, but I keep them there because we're keeping a repository of this information so we can do studies on it later. Okay. Just to finish off today, let's move our dynamics over here as well. Go over here. This is just today's setup. I'm gonna go to the Discord and get these numbers. These are intraday pivots. So see how today, like none of the yellows, none of the reds are like nearby. So it's not a pivot worth looking for, right? But let's go ahead and do ES 5344. Right about there. They're both right on top of each other. How about that? Okay, so that's the overnight dynamic. 5311 is way down here. Okay. All right, so wait, let me delete some of these. I also forgot to do one. What the heck? How did I miss one? Okay, hold on. That's why I do it like that and leave those fibs on there until I delete it, and then I know I forgot to do one. Which one did I forget? Who snuck away from me? How dare you? There we go. Okay, so each one of these yellow lines are breakout targets to the upside. If we're trading one day and we're running up to it, I can sell calls on the other side. If I'm longing, those are exiting long targets. Typically, the market will stage up against it as you roll by. I'll show you how this works. Okay, so let's kind of zoom on the hourly chart. Pretend that we're going to run into like a really awesome solid bull market as the time goes by. What's up? What's up? Yo, Annie, it's good to see you. How you been? Hit that like button, my fellow scooter mates, my fellow cadets. Let's go. The market were to rally, it usually does this. I'm just kind of paraphrasing, but it tends to, you see how you get these like little pullbacks like this? That's what this is predicting, where they will be. It's a very, very accurate technique. It is very good at doing that. So today, if we have a breakout before DD band, yellow line in the way is possibly where I would end my long trade. Let me show you guys. I left some of them on here for funsies. Let me do a, let's go back the last 3 months. Let's do, I'm just putting on a five minute chart. Let's see if I can find somewhere of these when we played with them. These are upsides. Let's wait till we hit them on the upside. Oh, let me zoom out. So to do an hourly chart. Okay. Is that the most I can do on a 5 minute? I like the 5 minute just so I can zoom out, edit. Oh, you hate me, Thinkorswim. Oh, I can do 180 days. Perfect. Okay, good. That's what I want. Numbers for non-event. Oh, Bearing Bulls. I love you guys. Thank y'all for looking out for me while I'm sitting here not looking at it. Non-event. Okay, good. What he means by non-event is that the market returned to the price after the event. It was before the event. Okay. Let me go to, so that means that the event is no longer controlling the price. If you start at one place and then it moves a direction and goes to the same place, we call that a non-event. All right, let's go. You are tuning in every single morning. Make sure you hit that like button. Subscribe to the channel if you don't mind. We're here for live every single day. I'm competing in the Robbins Cup. All right, here's some examples. Like I'll show you as we just get to them now. These aren't the, I don't know if we have any good breakouts from here, but look, like yellow lines from the bottom. Previous ones, there's an event day, like this is probably Tuesday, so it could have been, when was that? Tuesday, 7:30 CPI. Comes through here. It's that yellow line, pops back. See how cool that is? And then it's a pivot point, a really strong pivot point. Another day, you see it right here. You can't unsee this, right? How strong it is there, how strong it is there. And we're drawing these things like weeks in advance, months in advance. So it just acts and serves as a pivot point. It's unmistakably good at a pivot point. It's not a reversal target. I don't bet that it reverses, even though about half the time it reverses. What it is if I'm long, I end my long right there. If I'm bumping into it that day that we get close to it. I mean, you can't argue with these things. This is probably the coolest technique you can learn. Like I tell you guys, this is one of the best things. Nobody's ever argued the validity of this. When price is here, Matt and his friends draw some squiggly lines in some boxes and draw some yellow lines across the board. And when price gets to them, it usually pivots exactly on the tick from a line that you drew a month in advance at an all-time high. This technique is the best thing you can learn as a futures trader or any kind of trader. It is only a futures thing that you notice this on. The yellow line box is something that the distance is something that our risk interval algorithm gives you. It's based on margin requirements, and it is so good at this. This is called an illiquidity pivot, and we call yellow and red variants. Let me give you the place in Discord. In the Discord, if you go to the curriculum, it is in, it's number 2. Red lines are based off of the imbalance of an event. Dealer takes an imbalance on one side of the market is trading a direction, dealers on the other side. The yellow line is exploiting something called the margin buffer limit, which these words may not may not have any meaning to you, but they have meaning to us. Let's look at some examples of bumping these old yellows. I showed you when you tap it right here, it's resistance, right? Here it's exactly resistance. It doesn't mean it breaks, but you know there will be resistance there. And then when you break through them, they're bigger support. They're bigger risk levels on a wider scale and bigger scale. So anytime you're outside of DD band, you're using yellow and red lines as your pivot. So inside of DD band, we like to trade to the bands. When you're outside of them, markets are irrational. These are the pivots you look for in irrational markets. These are the best ones to do. Is this available only on TradingView? This is a not TradingView thing or something. You can draw this on any platform, whatever you want. You love the live mat. Thank you. You're new here. What's up, Demetrius? Welcome. ES moving non-event. Yeah. Discord, where's the video for this? And the exit targets. If you go to the Discord. Here. Exits. We have the exit rule summary. There's the gap fill. There's liquidity pockets rule, DD bands rule, illiquidity pivots, red line and yellow line exit targets. When outside of the DD bands, markets are irrational, therefore illiquid. Great breakout targets are illiquidity pivots. Code names are red lines and yellow lines. What is calculated as large supply and demand imbalances due to the onset of events that cause rapid market-wide liquidation. If you have like this big old nasty short squeeze or something that just screams the market higher, these yellow lines are where you bump into, and you can't really argue with the way that you can see it. Look, today's a big day. Like if there were a bunch of long signals today, I wouldn't be longing as it's bumping into and having a hard time breaking through this and ultimately closes below. Even messy days tend to observe the resisting power of that line a lot of the time. So inside of here, we know that day like this, we're not buying dips. If we are, it's like short-lived. You don't bet on just flying through and going. Half the time, or we don't have the statistics on it, but observably half the time it repels just like that. They're very good, and it's predicting a turnaround at all-time highs. That's the best part. For all-time lows, it works the same way in reverse. So what you're exploiting is just, I mean, you can't not see that. Look here, here's one right here. Pop. So what it does is it gives me a guide on certain long setups not to take. Oh my God, look at this one. Y'all spend time being like, this guy just drew on his chart, and I think he was so much baloney. Wait a minute. So y'all look at that one and see how accurate the technique is, and go learn the technique. I'll be right back. I'm gonna take a quickie break. All right, I'm back. Okay. So basically, you'll just know that as the market continues to move, they're very strong pivots multiple times. Even this one here that I showed you when I went to the restroom, there's a pivot off of it, pivot off of it, pivot off of it, trading up to it, dancing around it. See, sometimes it's random, right? So what I do is I exit longs there. I don't trust breakouts beyond it in that specific day, because a lot of the times it gets crazy and then it just gets random. So you can see the really strong pivoting action. I will circle each one of them. Remember, this is when this is at an all-time high. This line was calculated months or weeks before these times that it pivoted off of it, and you can't unsee it. once it happens. You know, it's this random and choppy around it. But these really sharp pivots, you see at exactly that level. No lie. Even this day, big catalyst day, hit that, bump down, then broke out, and then it's crazy. So does everybody see how strong these pivots are right here? Many times throughout this week, it hit that and played on it. It's very permanent and plays on it all the time. So betting off of it or around it, it's almost impossible to do. Are we going to break? Are we going to fall? It's like 50-50. Half the time it goes through, half the time it reflects. But what I do know is if I'm trading right up against it, my long is very rarely there. And if I'm shorting, I have to know that the market can squeeze really high before it comes down. So it's really a hard thing to trade as an entry point. We use as an exit target. So because it's hard to predict how far it overshoots sometimes, majority of the time, it's a very much an exact pivot to the tick within a couple of points. But a lot of times it'll overshoot and then come down. Because of this, it makes it hard as an entry point, but it makes it perfect as an exit point, right? Oops, let me get rid of this. So if the market is selling and I'm short and it hits right here, I exit. If I'm longing and it hits right there, I exit. If I'm longing and it hits right there, I exit. See how much easier that is. If I'm shorting for whatever reason anywhere and it hits right there, I exit. See how every single time it's a fucking great exit. If I long right there, I exit. If I long right there, I exit. Are you guys seeing the trend on how it's much more usable as an exit target? It works every time as an exit target. I mean, I guess every exit target works every time to exit the trade. What I mean is every time it's a great place to exit because this long didn't, I'm going to draw a different color. It didn't make my actual target that I was expecting without it. Like this short got interrupted for something down here, but it's hard to see. We'll have other liquidity maps, but this long didn't hit DD band. This long didn't hit DD band there. This short didn't hit DD band there. You see how like we usually trade inside the bands. This long didn't hit DD band. This long didn't hit DD band. So it's an interrupt to the move that you want. It's beautiful. Do we all see that? So shorting from here, I exit. Now, sometimes I'll miss a bigger move, but that's okay. When I'm trying to make my repeatable trades, yellow line as the exit target is the perfect way to get out of the way. Most of the time, like if I shorted here, I'm going to put like a sad face if I could have made more by holding, if I didn't exit at the X, and a happy face if I avoided a loss by exiting at the X. Like here, I exited here. Shoot, I took a bigger loss in my entry point. Okay, so here longed, happy face. Here short. Oh God, I got squeezed. Happy face. I'm glad I got out of the X. Long to there, X, happy. Long to there, X, happy. See, most of the time I am happy that I get out at a yellow line. Here, long, exit. When I get out right here, happy. Does everyone see how Matt's analysis is all about emojis? There's only one, and this line, 2 times that I missed out on more by exiting early, but most of the time, 6 out of the 8. Now again, this is a small data set. 75% of these, I'm glad I got out. Can we get some smiley faces in chat? This is a great lesson. So waiting for my target to come through, give you guys a lesson while we're sitting here. You understand that exiting at a yellow line is typically why we teach an exit target. We don't just make up stuff here. We go through statistics. The reason it is an exit target and not an entry target, because most of the time you're glad you got out there when you did. Everyone check? So the idea is if I took just any kind of short and I exited when you bump into it, I just got out of the way. If the short continues, I could have made more money. Dang it, I'm sad. If I longed and got out of the way, well, heck, I'm very glad I got out of the way. There's a smiley face, just repeating. Long, hit there, exit. It started reversing back to my entry point. I'm glad I got out of the way. Long to, or if I was short to there and exit, over time, I might have missed maybe a small frowny face there, but I'm happy I did get out of the way because I got squeezed pretty hard. So most of the time when you're trading up to it and you're exiting against it, you're really glad that you got out of the way. And that's why they're so good, because as an exit target, it kind of can show you how some weeks are going to be choppy and some weeks are going to be runners. An example, this is a nice, like after you support here. Oh, here's another one. Let me short. Exit. Oh, smiley face. All right, look. So as these days are runners, you know that this week can run up to there. Now this is going to be a chop fest week. Short, exit, short, exit, short, exit, short, exit, short. Missed out. Even this one day. Happy face, happy face, happy face, happy face. Sad face. Oh, I missed out on more. Dang it. On the long side, happy face. Every single time, it's a great exit target for any scalp that you do. Do we get some yeses in chat? Does everybody understand? Everyone understand? Are we on the same page? Now the question everybody has is, where the hell are we now? What are we doing right now? You can't even like unsee this. Look at this day right here. This is another CPI day. I don't know what every day this was. 7:30 in the morning. Bounce off of it, trade to it, or trade a D-band. You see how even like the market is like sitting here like it's an important level. It's a really awesome technique. Our bot gives you the yellow lines. Oh, we need to fix the bot though. This week, I promise. Even this week, resistance, 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 support, yada, yada. Okay, I've proven it to you guys. I can move on to today. Are we all on the same page? Aren't we all on the same page? We all get it? Yes, can you, a universal yes? Are we good? Okay. Where can you receive the liquidity levels, indicator levels? You go to the platform on the website. You go to your dashboard, and we'll show you that on the website. Now log in. It'll say like Launch Pro Plus. You'll see it there. Okay. So the question is, what do we got nearby where we are now? Anything? Oh, now that we're here, let's look at the last couple of days, because now we're in the vicinity of some of them. There's a nice long day. Anytime you're outside of DD bands, like this day right here, the perfect pivot to trade to is the yellow, and then usually call it a day. Let me delete some of these little gray lines here. Okay. This day, if I'm short, boom, there's a perfect day. This day, short to yellow, done. Short to yellow, short to yellow, short to yellow, short to yellow. Smiley face, smiley face, smiley face, smiley face, smiley face, smiley face. Yeah, frowny face. Nope, smiley face. I'm glad I can squeeze on that short. Okay. You see how that works? When you tap it, you're done for the day. Or you're done for that trade. Maybe not for the day. If you like to scalp a lot, you might still have some opportunities in front of you. Okay. Right now, nothing nearby. We're trading between the two. There is potential for this to move in both directions. Okay. And yet NASDAQ has these as well. When you're trading between some of them, it's perfect. You've got plenty of room for it to move. And so as we trade up, you're gonna have plenty of days where there's like run day potential. So all this week, all of these days are run day potential, because there's really no big resistance here, right? You might say, I'm going to short the market. It's going to crash. And then all of a sudden, wait, why is it acting as support from the other side? Why is it not collapsing? So if I wanted to short the market, the only time I'd short a reversal, this is the best technique to take from this. And again, I'm waiting. Papa Bear is waiting for his long trade to take a long off. I don't think I'm not trading today. Is if the market goes to here and then comes back down. If I want to be the reversal, I want to bet at the end of a short squeeze that resists off a yellow. And then there's typically where you get your big sell-off day or whatever. Never, ever, 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 ever in a bull market do you find a consolidating thing and take the short side of it. When all three of your signs are bullish, never do that. I'm just not telling you what to do today, but in general, consolidating markets are not liquid. Your greater bull market, it will not randomly sell off without an event. So normal day-to-day day trading is like, today's the day, this month's the month, this week's the week, market's gonna collapse. No, never. But if you are short and it falls to here, I mean, that's not a terrible trade, but betting that that happens without an event is the rarest thing in the world. Do we all understand? So if I want to short, I tell myself, don't I want to be the first person in a short? This is like everybody's shorting inside of here, and you're kind of at the end of the line. You're kind of in the middle. Not a good place to short from. Everyone else is betting around you. But however, what about this nice little frenzy of a day that does this, does that? Then you'll be like the first person really shorting it. All of these people got squeezed, and then while everyone's longing in the frenzy, you're the first one in. You're the first in on a high. You should always short from a high. Try to be first. Don't try to be in the middle. You're never rewarded being in the middle. Do we understand that? I don't bet against the bull market either by shorting every yellow line. You can. People do. I don't. When you bump into it, I tell myself, well, that's the stopping point for the day. And if we're here tomorrow, then that's a stopping point. It doesn't mean the market's going to end. But every time markets do reverse, they will reverse from one of these points, and probably only one of these points without an event. So if I tell myself I want to be short, these are my entry points on a short target, even though they're not really good entry points as we talked about. They're usually exits because they can overshoot a lot. So if you're willing to be hedged, you don't know how much you're going to overshoot, okay, then that's typically the place. So what I like to do is I like to wait for them to break and then fail, and then kind of set and find that high that it breaks off of, and then set a stop there, and then take a short there. So I'll short here, put my stop at the previous high, just in case it breaks and keeps going, or finds a higher high than I'm out. So it breaks through, fails to break, take the short, and then maybe you'll be right for 3 or 4 days. If you're in that lucky recipient that you picked the right one that everyone decides to liquidate from. I'll show you some examples of that, but I don't normally take the bet against the bull market. There's some great examples of short-lived shorts off of it. Like here, it bumped against it. See, it overshot and still, okay, short worked, overshot, but short worked. That's why you have to set your stop. So I look for the break, the fail, the reject, and then I can short. Short, overshoot, and short work. See how that kind of sucks? Sometimes it'll overshoot. That's what makes it hard. S&P overshot 10 points and then return. So it's hard to trade off of. So what I look for is the break and then the fail and then the return and then the short. Let me find some reversal points from yellows if we have any. I don't know if I can look at it on the... Oh, it's been such a strong bull market. Like this day, yeah, here's the day that it reversed for like maybe a week, right? 1, 2, 3, 4 days of selling off of a yellow. Typically reversals pivot from the yellow. You just don't know which one. That's what makes it hard to do. So, but as far back as we have history of these things, I got a ton of them. Here's a bunch of them from back in the day where this mark is right here. This one. There's a reversal point for like 3 months of trading. So, you know, you get lucky sometimes picking the right one, but which one did you pick, right? So what we notice is that reversals pretty much always take place from a yellow, but you never know which one. So it's like you want to cherry pick at each one of them and ultimately be right. Every once in a while, up to you, but at least you know that on the long side, it's a great exit target. All right, questions. I buy high, sell low, works every time. Demetrius, I love that. I love doing that too. I know a couple of streamers who do that also. Michelle, you subscribe to our executor where I can access liquidity levels or indicators levels. I cannot locate the liquidity level on your dashboard. Can you please show where I can find them? Click right here. Pro Plus, log in your dashboard, click right here. That's it. I've seen your name before. You've been here for a while. That you have not opened your platform ever? This whole time? Or did you just subscribe today? It's your first time opening the platform? Welcome aboard, by the way, if you just subscribed today. All right. Oh, nice. Okay. So that's where you get the liquidity levels. That's where you get the platform. What I was just drawing right there was like a manual drawing. I was teaching a technique that we do outside of the platform. All right, let me check. Oh, I gotta get your emails this morning. Lots of stuff. Lots of stuff. Memorial Day. What are you guys doing this week? Are you doing anything good for the holiday? Wow, the first morning I don't have a ton of emails in my inbox. I only have like 50, I feel. No important emails today. Nice and clean email inbox today. All right, so I'm looking for, this is trying to fill its gap here. Not really a strong breakout potential today, but that's looking to do this on res. But what I want to see is I want to long from here. That's my strong long, always on bull zone. Y'all see me hit that pretty hard today if I hit it. I want these scalps. I'm gonna grab a dip if we pull back. Bike riding a big bear. Ooh, going fishing with Pops. There you go. That sounds like a good day too. Fishing's always fun. Excited to see the marketplace launch. Hey, Karan, thanks, man. I'm excited too. We just got our 50th vendor, 50. And again, we haven't even advertised our market. It's just like word of mouth. A lot of our friends and partners. We're about 50 already. We're trying to push to get people adopting this new idea. Then we're gonna have a bunch of big launch events, so we're planning all that out today. We've got brokers, we've got trader funding programs, we have educators, we have indicator makers, we got a little bit of everything so far. We're gonna give those other marketplaces out there a run for their money, as we will have more features and things for traders to get involved with. We really hope that you guys enjoy what we've made. New outdoor griddle will get heavy usage this weekend. You got the George Foreman or griddle, like a real griddle. I always think of, I went to Big Lots the other day. Y'all know what Big Lots is? My first time ever being in a Big Lots. Even though there's one right by my mom's house. Visiting my mom over the weekend. My kid was graduating kindergarten. And we all were hanging out that day. And then I went to Big Lots, my mom's house. And I fell in love with that store. Big Lots is like dollar store meets Costco. It's great. They sell like big furniture and home goods on one side, and the other side it's like dollar store food, like candy and cheap chips and stuff. It was great. I loved it. Anyways, they had like the George Foreman grill, but there's like apparently a new one. And it's like on a giant stand, and it's actually like really big. And they were selling all this is all like in the 4th of July stuff. It was like the same thing as your normal George Foreman. Has a handle, and it's like the griddle like this, and it's probably about like maybe like maybe like 2 feet in diameter, like a big George Foreman grill, a little tiny electric grill. And I was thinking about getting one of those because I don't have, my house here doesn't have room for like a smoker. I had to get rid of all my pits when I moved. Bouncing around Houston for a little bit. I haven't had a yard in a while. Have a roof. So my house is like this. I live like in a gigantic house with like a rooftop balcony kind of thing. But my yard is like teeny tiny. The city townhomes are like that. So I've got like maybe like, I don't know, 6 feet by like 3 feet of yard. And then I got yard that like wraps around my house, but there's just like an air conditioner there. I really have no front yard. It sucks. And then my roof is a garden, so I have no room for a grill. But I was thinking about on my balcony, except balconies along the way up. I got 4 stories and a roof. So on my balconies, it's just like an apartment balcony. You open the door, there's like maybe like, 3 feet of space. I'm thinking about putting one of those little George Foreman grills right there. It's all I got space for. And plus I'd have to wheel it around. There's no way I'm gonna get a smoker up there and have to carry it through the house. I mean, I like have to have a hoist system to drag it up there. And I was like, well, then it'll be right there by the door. And it's just, so I'm thinking about getting one of those things. It's a Blackstone type, but the Sam's model works fantastic. Oh yeah, I've seen those. Those are good. Those are good. You're logged in, Matt. Thanks. Does the Pro give you data for futures? So Vishal, you have to get a separate data feed for futures. The way that works is we have partner brokers that you can sign up with that'll give you futures data. AMP is who I recommend because it's $100 deposit. Really great relationship with the folks at AMP. They give us $100 minimum deposit, $300 commission, $300 margins for contracts, and then you buy your data through them. So if you contact AMP, EdgeClear is also a good one we work with. They both provide the same service. EdgeClear requires a higher minimum deposit, which is why we don't recommend that. So if you don't trade, for instance, futures, and you just want futures data, what you do is you deposit money into the account, and then they withdraw from that for your futures data. And AMP is the minimum that you can do as 100. It's the best choice for just futures data. Don't forget, we have a new triple B on VIX. I forgot to calculate that for you guys. Do that real quick while we're waiting. And they just contact you. You sign up for a brokerage account. You contact them. You tell them you're trading with Rocket Scooter, and they'll give you your CQG login. And then from there, you are good. We've already had talks with the team about getting other brokerages working in our platform. Thinkorswim. Reserves like Schwab. Interactive brokers. Bunch of them. So we're talking about equities brokers and options brokers next as our one of our bigger pushes this year is to connect to a lot of brokers. And so I'm excited to be able to do that. We got platform features we're going to make first, but by the end of this year, brokers are going to be a new thing, connecting to different broker APIs for stock trading. So where can you find their contact details? For who? Which broker? Go here for futures data. And then tell them that I sent you when you sign up. I think in the sign up process they ask you, or you really have to talk to them. They just ask you like which platform you're trading through, and we're on the list of their partner platforms. Speaking of that, I still need to make my page their website. I don't have. Okay. Market's still going nowhere. I'm waiting for it to pop and drop. I still want to get my spot from Hedge Pressure or my spot from Bull Zone today if I can get it. Everything's still strong for longs from here. But bumping into that overnight dynamic hedge pressure levels, they're right here. Are they 53.44? Hold on. 53.44, yeah. Right there. Another technique of ours. Oh, that's TD. Hold on. Wait a minute. No, that's not TD. I'm sorry. 53.41. Come on. I was looking at the wrong numbers. 53.31. 53.01. Let's go down here. Anytime, hey Andrew, anytime I take a trade off a hedge pressure, I always will stop at maximum one strike distance below. So if the S&P, and relatively speaking, 10 points on the S&P futures or NASDAQ or anything. So an example is if 531 is the long target, then my exit target is no more than 530, so 10 whole points. But I will change that if the risk and reward profile is different. So what I do is I look and I say, okay, an example is if I've got 5 points of run to my target, then I'm not going to put a 10-point stop. I'll make my stop at minimum less than my run. So an example, if I can only get 5 points and maximum stop is 1 strike. So the maximum is 10 points or 1 point on the SPY. So max, I never stop any more than 1 strike distance. So my guide is if my run is less than my reward, my reward is less than my risk. Then what I do is I put my stop somewhere in there to arbitrarily make this at least 1-1 and greater. So this example, what is your run? The first thing you determine is what your exit targets. Are there any yellow lines in the way, DD bands in the way, whatever. So from here, 41 to 62 is about 20 points of trade. For the finality of this run where I probably need exit. That being said, I look at, okay, so if I were to stop right here, you get a 20-point target. Okay. That's a good 2-to-1 trade. But also note that I wouldn't want to stop right there because we have our strongest rule is also a second entry from there as well. So this is where complex trade setups go. Is that if I were to long here, I would place something small just in case it falls to there, and instead of stopping out, I'd get on something much bigger. So say the example is you want to trade 5 total, okay? What I do here is I would put 2 of those 5 on my long, and then I'd put the other 3 down here. I'd make a bigger second attempt right there, and then I would stop right here on all of it. So instead of stopping at that place, because the 10 points actually ends up being another entry target, I treat it like both trades are possible. So I have something small in case it runs, then I have something small so I don't take a lot of drawdown, and I have a lot more buying power to get in on something bigger, and I get a really good cost basis right there. Does that make sense? This goes into a little bit more of a complex setup because you have a second possible support where your stop would normally be. So if you don't want to do the hold and drop, then what you normally would do is I would long here with a stop arbitrarily in the middle, maybe 5 points. And then I would just long again with my bigger position here with the stop right there. So I can take a long and just stop out and then miss it. Or I could take a long, want to hold for a little bit longer and not miss it, take a little bit more drawdown, but the bigger probability in case it runs. And then I save all my buying power for that. Okay. That's how I particularly do it. Now, the last question is, how strong is my long trade? Do I want to take something heavier here or something very light? But all the evidence points to, okay. Resilience is greater than 0. Okay, so there's a force there. Above hedge pressure trying to break. Great, there's a force there as well. Liquidity map, resilience, both looking good. DD ratio is what gives us a really strong support there. So DD is the strongest of all of our indicators on this bull zone bottom. Bull zone bottom is the strongest pivot we have in bear zone top. These are irrefutably our best pivots, hands down. Everyone here will contest to it. My favorite long is this exact trade. This exact trade is my favorite long. It used to be BLUs off of hedge pressure, like Nasdaq is, but BSU from here to here. This #1 scalp on BSU is the strongest play we have. I don't know if is that y'all's favorite too? Is my favorite. The idea is that I wouldn't want to stop out at the strongest play. I would put something really small. So all the evidence is pointing, okay, it's likely to want to go up, but again, I'm going to put in something small. And then I really want to hit it long from here. That's how I do it. So I see that both are possible. So I say I want to be in a trade in all of this. So personally, me, I like to get it on a trade and not be so accurate, not stop out and then try again. I don't like to make multiple entry exit. I know in general, the probability is really small that we break this and keep selling. So I'm going to get in something very small here and hold it just in case I end up being right. And just in case if I take this drawdown, I'm not upside down. So I can calculate how much it's going to be. If I'm comfortably, if I say I never want to lose more than $500 a day, well, you pick whatever is comfortable to you. Say if my daily loss limit is $500 and I don't want to make 2 entries and the second one's going to have another stop, then this first one can't be losing $500 a drawdown. I need to position myself comfortably that this drawdown, if I do want to take that trade, is much less than 500. And what I normally do is I make my first entry less than my second. So I might segment that 500 into 2 setups of 200 and 300. That the total is equal to my loss limit that I want. In this position, I match it to where from here to that final stop would only be a $200 drawdown. From here to the final stop, which I guess would be here, 300 and total is 5. So I'd be in a small enough position so that this long amount of travel is still only 200 bucks a loss. Very far from my loss limit I want. And then my second entry, I can go in a little heavier because it's a shorter distance to travel to give me a little bit more of a loss. And then there's my loss. So you decide what's comfortable for you. I'm just making up a number. This 500 doesn't mean anything. It's just a made up number. What do you want to lose a day? And if you opportunistically see two trades that you want to take, the smaller one can move farther than the bigger one, and that the total of each one of those two setups is your loss limit, then you're good. And then you partition your trade on how much you balance yourself out for multiple entries on a potential long, where it can pivot anywhere inside of here. And that's how I do it. If the distance from here to here is very long, like 30 points, then I don't hold 30 points to draw on. The distance is like 10 points, give or take. I'll play both of them at the same time. I'll hold this one. Like here, I would be holding this one, and I wouldn't add to it at all until I got to here. And only I would add to it if there's no event. So if an event happens, I get out of the trade no matter what. I don't trade through like events, news events, things like that. Yeah. Long answer, I know, but basically this is because you have two good pivots right close to each other, kind of in the same place. Yeah, I would double down. So it's like it's not really doubling down. It's actually more than doubling down. My second entry is always bigger than my first one. I like to do like 60-40 or 70-30 kind of thing. Like buy 3, then buy 7 on the second one. Buy 3, then buy 5 on the second one. Things like that. Asymmetrically, I never buy 4 and then buy 4 again. If I'm taking a second entry on a second dip, it's always a bigger position. So it means my first one has to know that I want to do that, and I have to calculate what I want to do. So in futures, what a lot of people do is they'll pick a percent that they're willing to lose a day. As your account gets bigger, you're going to lose a percent instead of a fixed dollar amount. That's okay too. And what if you pick your percent to be at maximum, I'm going to lose 10% of my account if I'm wrong. Now, again, that sounds ridiculous for a stock account, right? Nobody trades to lose 10% of their 401k in like one entry. You know, in stock world, people tend to like to trade 1 to 2% a day. You know, your account and a balanced, you know, portfolio grows 3 to 10% a year sometimes. So day trading is different. You're expecting a little more risk for a little more return. So day traders tend to have different rules of thumb. A couple percent a day in a leveraged stock account is what a lot of people do. The futures account, the smarter traders set a percent gain because futures grow very rapidly and they shrink very rapidly. So you tend to have smaller futures accounts. People don't come in and throw, you know, hundreds of thousands of dollars in a futures account and start scalping for millions. Most people that trade futures can turn, you know, 25K into 100K or 5K into 50. And they just do that repeatedly. Keep the account small, leverage it up, hit your targets, cash out, repeat. Because futures are leveraged enough to do that. So a lot of futures traders will have a percent rule that I know, and they'll do like 5% or 10% a day, 15%, something like they'll make like, I'm not gonna lose more than 10% of my account a day. Millionaire trader puts 10K into an account. I'm gonna lose 1,000 a day on this. Okay. So then there's your budget, percent or 10% a day, which should be 1,000. If the account gets smaller, then your percent makes your loss smaller. This is a percent basis. So it scales with the account. You watch your latest video on Crazy How from 11 months ago. You're sticking to the same checklist parameters. Oh. Yep. I don't change much. I found what works for me. And it's not like the most exciting thing in the world to not be taking every trade to a newer trader, but to an advanced trader who's been through the works, who's having a hard time making money, who's struggling with any sense of control, kind of becomes addicted to what we do here, because that's the one thing that most traders are lacking is control. And the one thing that people see me have is perfect control. I know exactly what I want to do and when I want to do it. And I'm not taking every trade every day. But that's not how you make money in this game. You're not trying to make every trade every day. You're trying to make the highest probable move. At least that's me. That's my style. And that style was kind of created for someone like me who doesn't just wake up and trade and then go about my day. It's someone like me who wakes up and trades and then runs a couple companies at the same time. And so, and speaks and travels to speak, and it's on podcasts and shows and stuff. I'm always doing something else, so I can't be focusing on the market all day. So I have to basically, I have like a 2 or 3 hour window in the morning to make a trade. And if it's really good, then I'll take it. If it's kind of like medium, I don't take that risk anymore at this stage of my career because I'm too busy with other things. And what I've learned is that you don't want to be in a trade whenever you got something else going on. I'm about to be on the phone for the next 6 hours, talking to vendors, talking to my executives, talking to my marketing team. I'm not going to be comfortable focusing there when I need to focus on just a trade, when I don't need to be making a trade. When you learn that you don't need to be making a trade to make money, or making a trade every minute or every day, or trying to find what do I need to be in now to make money, you'll learn that you find the thing that works, you exploit the thing that works for you, and then you don't try everything else. When I see traders trying a long one and short one and long one and short one all throughout the same day, those people are burnouts. They don't make any money doing that. As I found out recently, watching other people who trade and stream, watching like people that just make something, then lose something, then lose something, then make something, make something, lose something. That's something I can't fathom. I couldn't do that and focus on my meeting. It's like I watch other traders whenever I'm not, whenever I like his background noise whenever I'm doing my meetings, and I just don't understand how they pursue that. But like I said, to each their own. I am 42. So for me personally, this leads to my highest success rate is waiting for the trades that I want, that I know that I'm going to take, and not trying to flip-flop throughout the day and play both directions. I pick one direction, start of the day, then I wait for it. I either get it or I don't. And it happens to sit out a lot, but the strategy works for me. It's perfect for me. And when I get to this point where you didn't take the B setup, hey, Vishal. I think like mine was kind of molded over time. Like I didn't really wake up and consciously start designing a system and trading for myself. What happens is over time, you just kind of fall into something that works for you as trial and error takes you there. I learned something, I try it, it works. Okay, I stick with it. It doesn't work, I abandon it. It's like typical natural selection process. The stronger part of the herd continues to propagate the herd, right? So like the stronger technique stays and the weaker technique falls off. As I learned, like, okay, if I'm trading and I'm in a meeting, I just felt miserable as the trade's going against me and I can't focus in the meeting and everything's falling apart. And I'm like, okay, let me just make sure I'm not in a trade when I have a meeting. I look at the clock. Okay, and most of my meetings the same time of the day, so I know I have a limited window every day. Things like that just kind of evolve naturally on their own. So I don't really like just wake up one day and say, this is what I'm gonna do today. For me, it evolved slowly. How come you can't search by liquidity map and strategies? You should be able to. You have to go through and select one. So 0 selected. Pick which one you want. You have to pick with the little pencil tool. Chase. There you go. Yeah. It also has it. Like, and don't trade during events, don't gamble. Just find the days, you know, that are just ebbing and flowing in between events, and then find your position, and then, you know, stick with it.
Shop Kroger for over 30,000 mouth-watering choices.
I'm gonna tell you something. Patience is key. Don't be fooled by your average day trading streamer who's long, short, long, short, long, short. These aren't your millionaire traders that you need to focus on, despite the marketing around them. Make sure that you know that the smarter, better, more successful traders in the world are people that have a strategy and they exploit the hell out of it, and they spend most of the time sitting out when their strategy is not in place. They're not trying to guess or pick the direction of the stock market every minute of the day. That is a fool's errand. A real trading strategy is exploiting something that you are so good at, that you know the odds on, that you know how you play. And then if it's not there, you're not trying to guess the rest of the day. I have no strategy from this move right here. Put a gun to my head, which way are we going? Okay, up. Maybe. Nasdaq looks like it's wanting to come down. S&P looks like it's wanting to go up. Up, maybe. The greater bull market is there, so maybe up. But it's not, I'm not super confident. So it's like, I got dealt a 3 and a 9 in poker. Flop is Queen King Ace. I've got nothing. I'm folding. Do I think AI will change financial markets? Probably not. I don't think AI is smart enough to make decisions to predict the stock market. So therefore, it's not going to be able to influence the market, because to influence the market, everything must line up in the same side and push the market at the same time. I think AI models are programmed by humans who can't predict the stock market. There's only one rule of the stock market that everybody knows. Well, there's actually 2 rules. That over time, the stock market always goes up, and that every single crash we've ever had, it's never gone to 0. These are the 2 rules of the stock market, the 2 basic boundary conditions of any AI robot that you'd make. Stock market always goes towards infinity as time goes by, and the stock market has never gone to 0. So that's about as good as we've got as far as a consistent trading strategy goes. As far as what to do in the middle, it's really such a complex dynamic thing with so many factors. It would be impossible to even identify them all to even effectively. Now, AI may have a better chance at doing that. But my belief is that there is no pattern to the stock market. And AI has a hard time locating a stop sign when there's a bunch of people behind it wearing red shirts, right? So it lacks pattern, so that's such a like pattern recognition, which AI is really good at, is gonna, but not the best at, is ultimately not going to be that great. I think over time, if we spin some actual artificiality, some real intelligence from it, like a consciousness, so let's talk about Skynet here, but we get like really start to get that human decision making, like it's an inefficient thought machine like a human brain is, it actually might be better than a human at trading. As a simple logic machine, I think it's going to fall flat on its face, because there's no logic to the stock market. Its determinants are based on so many factors and so many things that you can't understand. An example is why the stock market crashed one day. Well, it's because some fund was underwater and they decided to pull the trigger to get out of the way before everyone else did. And that's the morning they woke up that morning and said, everybody, we're selling today. That decision was made by some person who woke up that morning and said, yep, today's the day. When that person knew they were underwater for weeks, they waited to see if it got better. They exhausted all their methods of calling people to borrow money, and then they finally pulled the trigger. All of those pieces led to that decision that made them sell that crashed the market. None of those things could have been seen in the candle action, the price action of the market. The risk some firm had, how long they were willing to hold before they liquidate, what was their willingness to get additional money, and then ultimately that human decision that was like, you know what, I just feel it. Today we need to get out of the way. This is it. I can't take it anymore. I'm done. None of those things are logically derived, right? You can't see beyond that veil looking at the candles. So an AI machine would only be able to dynamically look at market factors, macro factors, candle factors, but all those things I described in that scenario would escape the purview of what that machine is designed to see. You couldn't see it, right? Does that make sense? So a proper AI trading machine would need all that information. All the influencing factors of what made the market move. And the biggest move came off of one fund deciding to sell off, which bumped into the next fund, which bumped into the next fund. They all crashed. Could you have predicted that humans' decision that day? Could you have predicted that none of their friends would loan them any money? No, you couldn't have predicted any of that. So it's hard to predict stock market with a logic machine. I would be the person that would write an entire book to say it's impossible. Nvidia looks like increasing volatility. Just means we can see moves either way. It means that that Wall Street has made their bets and they're not betting into it. They're actually getting out of it, leading to earnings. So the people that are short are getting out of their short. The people that are long are taking profit. So people are scattering away from it, which means the move could be violent in both directions. Go way up and then reverse, way down then reverse. But it's likely when the volatility is increasing going into earnings, what I tell myself is that it's going to break the expected move, or it can break the expected move a lot of the time. So, right, I wouldn't sell options into increasing IV, or I wouldn't be on the sell side on the options side if the expected move can break, because that's where your losses compound. You know, whenever you sell, you want the expected range to not break, so the IV crushes and then you make all the premium. So with volatility increasing, the sell side of options is very dangerous. Does that make sense, Tom? If the volatility is really big, because you can't know what people are going to do, but it means it can break those ranges much easier, right? So like, I wouldn't be selling calls or selling puts saying I'm going to just be on the naked sell side of the market. So it's kind of like you tell yourself it's a toss up. The sentiment isn't bullish, the sentiment isn't bearish. The sentiment is people are scattering. Now, it doesn't mean it will break the range. It just means it's volatile enough it can. If nobody does anything, it won't go anywhere. So I've seen days where they converge like this. I would say diverge like this, where it goes nowhere. It just stays flat. I've seen times like this where it just goes and reverses. I've seen times like this where it just collapses and it keeps falling. So it's very much a toss up and hard to say. It's double topping, longs are getting out of the way. Makes sense. People just are going to stay out of the way. It's a technical top. It's been squeezing back up to the double top. Bears are also getting out of the way because they're scared it's going to squeeze. So it can go either direction. And chances are, if it picks a direction, it might propagate a squeeze because the volatility is high and the liquidity is low, which means it can move fast and really fast. So it's like, if Wall Street's telling you the bulls are getting out of the way and the bears are getting in the way,
it literally tells you the same thing. Get out of the way. This is one that I would ignore. Like when it's looking like that, I just want to sit back and watch the fireworks. It could get messy, and it's not a trade. I don't trade into volatile markets. A coin flip can go the other direction and be very violent against you. It's not my cup of tea. Yeah, great question. Yeah, it means you could see big moves either way, or see no move either way. But what it is it's not a trend. So like a lot of those times you'll see the market fly really fast and then immediately get slammed down. Because what the monthly map is alerting you to right now is that people are on both sides of the market are just trying to get away. Right? Bulls over time are walking away. Bears over time are walking away. So that's why a lot of the times it'll reverse sharply, go the other way, because say for instance, it happened, then the bulls started selling, it dropped here, and then the bears are like, oh hell yeah, I just got a dip to get out of my bear trade. And then the bulls are like, oh hell yeah, there's a high, I can get out. So if people want to get out, it'll diverge and start flying around the other way. So the move can be strong, the move can be wide, the move can reverse a couple of times. Somebody asked me this earlier, what I'd do if I had to pick a trade. I'd pick a long, but I didn't trade it. So it's, while with our style, it's a little easier to predict the direction of the market. Not everything's tradable. Even if I feel like I'm right on a trade, I only take it under certain conditions. Resiliences are positive, greater bull market's there. See, I didn't short anything, still not shorting. Okay, cool. Question, strategies, do you think AI will change? Yeah, so. Yeah, AI can't mimic human emotions, and it can't really categorize the motives of why the market moved in the past. Like you can't provide a data set to a robot that includes all that scenario I said, like, hey, robot, here's a month where the market started selling, and the robot will say, okay, what are all the factors? Well, these are all the reports and what they said. These are all the expectations leading into the reports. This was the conditions of the market. This is the liquidity. This is all the bids, all the asks. This is how much money flew into the market every day. This is the price action leading up into that. And the robot says, okay, I've derived an algorithm from all the information you provided that I can predict these conditions. And that algorithm would probably be 100% correct under those conditions. The problem is those conditions are never the same ever again. The market never has a boundary case condition set that it relies on as a standard set of conditions. The only standard consistency in the market that there are people on the bid and people on the ask, and there are people that throw market orders at the market. And the dealer can either let it hit the bid or ask, or they can jump in the middle and buy it. This is a consistent thing that happens in every single trade. Apart from that, is anyone still here? Am I the last one here? The internet just died for like half a second there. Yeah, who knows? Like the internet just went dead. All my devices. For like I just cycled my modem and then it turned back on. I'm not really sure. Half the city is still without power. It's probably most of you guys have gone by now. But half the city is without power still because of the big tornado storm we had last week. Couple weeks without power for sure. They're probably repairing things. This happens. So shutting. Who knows if this is related or not related, or just a random thing. Yeah, I'm just trying to speculate, but it's weird. Everything just turned on. I was like, what the heck is going on? Just the internet, the power, but maybe they could be running new cables, running new lines. Who knows? Who knows? Who freaking knows? Refresh my RS. Okay, hold on. I need to reconnect. Thank you, Tom. All right. There we go. We back. Thank you. Thank you. At some point, my story just kind of decided to cut me off. Oh well. Is there a way to set a strategy for bulls on bottom? There's not. Distance from bulls down bottom. There is a there is a parameter that I can remember. It's been a while that I made. Wall target up, wall target down, that might be able to do that. I don't know if it's specific about which wall. Wall target down, distance down between price and the bull or bear wall. So it looks like it's not selective. But let's go ahead and search for that. Oops, let me start over. Oh, I turned off all the parameters. Oops. I forgot my parameter set. Let's just load layout. Remember my scanner settings. Ticker, what I normally would do is price, volume. These are the parameters that we put on there. So let me do ticker. Half gap distance. So let me just put some things on here that I normally use. Am I blind? Why can't I see it? Distance. The distance from hedge pressure to X, MHP to Y. Distance from hedge pressure if you're less than X. Let me try the Am I blind? Oh, there it is. Okay, distance a half gap. Okay, and then what was the last one we're talking about? Bull zone, target. Wall target down and up. Let's play with some of these. Okay, let's have some fun. Let's pull liquidity maps only. And let's look for BSUs.
Wall target down. See if this works. Puts the dashes are still ranked. Okay. So an example, let's see if this does it. Let me just pick something CMG. Oh, it doesn't necessarily look at the bottom. It looks at the next wall. So it looks at the wall, either the top or bottom. It's not selective. Okay. So we'd have to say that also as a parameter. It needs to be in bull zone. We don't have a parameter for in bull zone. Okay. We'll have to create it, but it's still here. You just have to cycle through them until you find one that is. And let me do, we'll be a little more clever. Let's add liquidity map current just to show you, so we can actually see like the mean reversions. We would ignore. So this will be a way to do it with what we have. BSU current liquidity map on Google, and it's really close to the downward wall target. Google's at the bottom of the bull zone. Let's see if it works. Nope, it's not doing bottom. So the way that I wrote the logic, he didn't, our developer that coded this, it didn't do all the pieces of it. So this is not completed. So what wall target down is supposed to be is if you're in a bull zone, it's the nearest target here. But in this example of Google is that if you're in mean reversion, it's the bull target down from here, which is the correct thing to do. If you're in a mean reversion, you want something that's actionable from the top of the bull zone. But inside a bull zone, you want something actionable at the bottom. So right now it's going to give you both of them. If you know our stuff, you'll know what I'm talking about. So every once in a while, one of these will be like the BSU. There's the example. So we'll pull them. They'll just be mixed with mean reversions as well. Does that make sense, Chase? So if you do it this way, because what it is wall target down, it just moves until it hits, like if the wall is a box, it moves until it hits either boundary of the box. So mean reversions will pick out this one. BSUs will pick up this one. So now let's select just BSU. And the problem is it's picking some of the ones that are, just pick another random one. Yeah, it needs to be fixed for a lot of these cases. Wall target down is a percent basis. Let's find some of the ones that are like around the edge. Let's look at ITB. In illiquidity pockets also break it. Because you remember the rules for illiquidity pocket? This is what the problem is that in a liquidity pocket, we'd call those mean reversions, but in an illiquidity pocket where the bear zone is above the bull zone, the letter is still B up until here. So this is still considered B in an illiquidity pocket. So that's kind of what's throwing off the algorithm, because the algorithm is saying it's still a VSU, which is correct. It just doesn't know to exclude the top of the zone when it is BSU in its illiquidity pocket. So it thinks that, correctly speaking, that in an illiquidity pocket, this is the bull zone bottom that you long off of, which is correct, as I told it to do that. But it needs to be more specific with the conditions. And what you need to say is, we need to have a strategy that says, if Z zone is equal to B, so that's how our logic is. Z is this letter right here. If Z equals to B and not next wall target up Z equals BR.
So this logic would fix it. If the zone is B in an this will fix this one case. The zone is still considered B in an illiquidity pocket. That's just how we break it, because it's bearish and bullish at the same time. So if zone is equal to B, check, and not next wall target up is equals BR. So if we look at the next wall target up and it's not bear, then this is excluding liquidity pocket, illiquidity pocket. So we need to write some code in there that the illiquidity pockets don't break the logic there. So it allows you to purely just sort for bull zone bottoms. So if you're in a bull zone and you're not in an illiquidity pocket portion of a bull zone, this logic is exclusionary of that. So I need to correct it. Things like this go on the wish list. I love that idea because it's our strongest trade. We need to be able to search for it. All right, guys. Looks like I might get that bull zone after all. Well, let me see if it happens. I'm gonna get out of here. I love y'all. See you later. Work.